welcome to FinTech Diary by the Economic Times, etbfsi.com. The world of FinTech is evolving constantly, and we at FinTech Diary try to map these trends for you. My name is Amol Dete, and my guest for this chapter is Manasi Shah, Vice President, Accel. Mansi, glad to have you.
Thanks, Amol. Great to be here, and thanks for having me.
Thank you. Uh, First of all, tell me, where are you investing these days? Because I have been hearing a lot of stories about investors are going slow, fintechs are in trouble, startups are not getting the dry powder. But on the other side, investors are also saying that they are going a little slow, but enough dry powder is available. So tell us, where are you investing right now?
Yeah, so we're very actively investing. Calendar doesn't reflect any slowdown, and actually, I think the quality of entrepreneurs coming out right now, both in fintech and otherwise, has just every year, every quarter, almost there's a big improvement. So very actively investing. Last year itself, a bunch of very interesting, exciting deals in fintech. So I think very active. I think the lessons learned have been implemented. So definitely we want to make new mistakes, not the same mistakes again. So looking for the right folks, the founders that have really thought through it, they want to do this irrespective sometimes of capital or not, are passionate about what they're building, and also know the challenges that might emerge, right, in fintech, the good and the bad of it. So being very thoughtful on that front, but very active.
Good to know that you are active. So how many startups, fintechs do you meet on a regular basis? Or how many pitches are you hearing?
Good question. Yeah, I probably I would think, maybe 15, 20 a month, new interesting companies that cross our paths. And as you know, and the audience might already know, we invest across different stages. So starting from very first seed through Series A. So a lot of times we're meeting companies we've met before. We're looking for something to evolve or develop, and checking in with them again. And a lot of our investments have come through that. So been kind of very busy on the fintech front, and hoping that this year brings some good new investments.
Sure. Tell me honestly, what makes you invest in fintechs? What do you look for, when you are actually investing? What are those key highlights, that you choose before putting your money into his account?
Yeah, I think, I'll put it into two buckets. I know a lot of our audience might be founders. I'll put it into two buckets, which are, one is, this holds true for any startup that you're doing, right? Not just fintech. And then there are some very fintech specific nuances that I'll try to highlight. So I think, look, in venture as an industry was made to find, really, really large markets and large problems to solve, that build very meaningful companies, right? So I think the biggest kind of question, and I know sometimes founders are tired of hearing this, like, what's your TAM? But really, I think, who is it? What problem are you solving? Is it very deep? And if you solve it, is the prize really large? Is one key factor that we're looking for. So if you think about like large fintechs that have emerged, right? Like let's say Accel in our portfolio. Like insurance is a multi tens of billions market. So in that, when you're disrupting, and you can go through, like, Accel offers motor, health, now life, you're getting multiple kind of, access. If this works, it should be like a tens of billions worth of company. So that's very exciting. I think the second big piece is the founder and the founding team, right? So very often a lot of the decision is on the founder, but I would highlight founders to think through, who am I really surrounding myself by as well. So you may have certain skill sets. There are some complementary ones that you need in your journey. So you would hear of this term called founder market fit. So is this really, am I best suited to build this company? So very often, especially in fintech, I'll highlight that, I meet founders who are like, hey, fintech is large. There are large pools, to my first point. But they've never kind of, experienced it, been through any financial services, not interacted with it yet. And that doesn't mean that they can't build a company there, but then they have to be very conscious about how they're playing on their strength. So I would say, especially when you're building in fintech, what is your right to win? Is something that you should be very thoughtful about, and then that pops up clearly to us as well. I think the third kind of piece in fintech, really, and I'll shift to the second bucket, which I think is fairly specific, is it's very important to understand the business you're in terms of business models. So like, let's say you're building a lending company, and you've read Uber Travis saying that like forgiveness is better to ask for than permission, and go all guns blazing. You're going to get stuck. It's the wrong market to implement that strategy in. Lending, easy to give money, very hard to underwrite and collect back. So can you go very deep and understand what business you're in and what journey you want to craft based on that? In insurance, very important to get a license, very very hard to get a license. Do you want to enter that journey? So I think that understanding the business model and really how money is made is super important. I think I often find there are a lot of distribution led fintechs, and they say, okay, we'll figure out the monetization later. My suggestion is that at least for yourself, you should think through that path, and it will impact a lot of your design decisions on day zero. So I think the third piece I would highlight is like a very healthy business model. And even if it comes later, do you have an understanding of how you will get there? And the fourth kind of fintech related beauty is really an understanding of the regulations, right? So there is no regulatory arbitrage today in India that I would personally put my money behind, because it's bound to disappear. So, assume that that doesn't exist. Now, knowing what you know, can you blend with institutions, regulated entities, banks, NBFCs, learn from them, partner with them, and really build something that is valuable enough for you while being in collaboration with the ecosystem and the regulators, is the fourth kind of super important thing. So I think I know these are a lot to kind of check off, and there's always a spectrum, but I would not I would push the onus a lot on anybody starting up in fintech or building that fintech company. Be very honest about what journey you're in, and think through it a little deeper, and make sure that you are excited about that for the next 10 years.
Noted your points, in fact, very meaningful, Mansi. But tell me something, has the due diligence process from your side changed, considering what fintechs are going through? Because most of the companies are listed, but they're still not generating the value. They want to go for an RE, or obtain a license and become a RE regulated entity, but that's not going to be easy. So have you added more tick marks specifically in your due diligence process, starting from whether he's wearing a t-shirt and jeans? No, I don't want him. Let him be a formal guy wearing a fabric tailor-made suit and a corporate kind of an attire, so that he can show some seriousness on the softer side, or some more maybe due diligence points that you have increased.
I see why you're wearing a jacket today, Amol. Yeah, no, I think jokes aside, I think, see, diligence is deeper today for fintechs, in the sense where I would like to see, we're all going to partner for the next 10, 15 years and beyond. So if I can point out certain watch outs, right? That like, hey, look, you're on the regulatory gray over here. Why don't we fix this right now, so that the rest of our business is like not deeply impacted down the line? So I think I do look for people who can and will be looked upon favorably by regulators. And a lot of that, and it doesn't mean, again, it's not like again how you dress or like what you've been through. It helps if you've been through the financial services ecosystem. There is no doubt about it. So I would put that as a positive. If you've seen some bit of the banking world, or like NBFC world, or even fintech world, that you understand kind of how the regulator thinks. And in the end state, I personally believe, and maybe it's a slightly overarching statement, if almost every fintech is going to be licensed under something. And I actually, as an Indian consumer, I think that's a great thing, right? I want important people in the system who sit on money in my economy to be regulated. So assuming you're going to be licensed, how can I build regulatory relationships, bring on the right advisors early on, and can I convince them that I am the right person to build the business? So I do think that's a very very important point that you raised. and it does influence the decision a lot, especially in places like lending. I do look for I sometimes do say this informally, that like, if everybody has to lose money once when you're lending. So are you going to lose money now if it's the first time you're doing it, with our journey, or have you already learned the lesson and now you're coming? So I think, what lessons have you learned, either directly or through the network you're creating around you, is like super important. I think the other piece that I sometimes see, like look more for, is there is a lot of cross sell in financial services, but the first thing you choose is super important. So very often, I meet startups that are saying that, hey, look, I'll do this, and then later lending kar lenge. But at that point, to do lending is not always easy. So are you depending ki I'll sell 5 6 different products, and then right now I'm just like burning acquiring, versus am I choosing the first wedge product very carefully? I think that's the other piece that has become very important, because the market is increasingly getting competitive. So if you're going to say that, hey, look, I'm going to distribute insurance and make my money later, there are like going to be 30 touch points that are selling insurance. Why will you win there? So those are like two of the dimensions that have increased. The third thing that I've always like now started doing more of is bring on banking folks to advise, bring on X kind of regulator, policymakers to advise much earlier in the journey. So my point is that a lot of these things are solvable. Doesn't mean someone will not invest based on it. But yeah, these are things definitely to keep in mind.
Okay. You sometimes said, sometime back you said about losing money, you have to look at that. Do investors also lose money? Have you lost money?
Well, fingers crossed, not yet, but absolutely. In my career as a VC, it is inevitable that we will also lose money. Yeah.
But when you invest, you said that 10 to 15 years, or sometimes, most of the VCs take a longer route, or look at a long-term view.
Hmm.
What is your horizon generally when you invest in whatever company, and do you also, while giving him a first check, do you also decide your exit, date or something like that?
Yeah, good question. It's typically this 10 to 15-year horizon. And if we do think of exit at the point of entry, which, once a founder told me, he's like, "Aap log to enter nahi hue, abhi exit ka soch rahe ho." I'm like, that's a fair point. But that's the nature of it, right? Not our money. We're taking money from someone and want to return it with a certain upside and IRR.
But
So
what if you don't earn the money that you wanted by the time you exit?
I will not be doing more calls with you, Amol. Then it's a portfolio approach. So in some you lose, but at least what we're looking for is that when you win really big. So goes back to my first point on why market or the size of the outcome is important, because the math that we're doing is that let's say 8 out of 10 will be mediocre to small outcomes or even shut down. The one or two that become really large, like let's take Flipkart, right, was a very small seed check from a first fund, and today it's a like 20 billion company. So if it works, it has to be really large. That's the math. I think the one highlight I'll point out, especially for fintech on this 10 to 15-year horizon, I think there is this misconception that the best companies become large in 3 4 5 years. Everyone would have seen that unicorn chart, that time to unicorn, like first used to be 7 years, now 5, now 3. I highly urge that, like, that doesn't matter. If you're not building a sustainable business and some on paper kind of valuation in a short time, like, I think it's unrealistic to have, very large companies in 2 3 5 years. In fact, they could have been very great companies in 10 12 years. But because they didn't set the foundation right in this hurry, they miss out on that opportunity. Especially in fintech, I actually think these are like 10 to 15 to 20-year journeys, and then they continue compounding, right? So I think I want to like dispel this misconception of like some 3-year unicorn.
Okay, sure. Let me move your focus specifically on the industry now. And you sometime back mentioned about cross-selling, which was my next question. Eco is a good example. Insurance is again a very unusual subject. Why unusual is because there is a lot of potential, is what we hear. But people also don't look at the fact that there are private companies operating in that space since last 2 decades. And every fintech specifically operating in insurtech space believes that he is going to be the leader in that space.
Hmm.
Uh, with this background, what I want to tell you, Manse, is how do you analyze that XYZ or ABC fintech will perhaps make its mark in insurance or maybe wealth management or XYZ domain specifically? Because now the competition is increasing heavily into every segment, and cross sell is perhaps going to be a major business, but the pie or the revenue share is going to be slightly limited. So, how do you calculate your maths there? How do you see the competition, and how do you actually then bet on the fintechs?
Yeah. So I think I'm not convinced by simple cross-sell stories. I would like to know two things. I think one is first to even have the opportunity to cross-sell, to buy that ticket into the market with your consumer or your SME, your wedge product has to be very, very sharp. So Acco, let's take Acco for example, started off with motor insurance, large market. Everybody who buys a vehicle needs motor insurance. Recurring market. Every year you need to kind of renew, right? And huge kind of premiums that were like very inflated. So you could disrupt from price by becoming the manufacturer and the direct distributor. Now, in this very sharp wedge product, like if I went and spoke to 100 customers of yours, whichever company you're running, that if this company disappeared, are you going to be disappointed? If that answer is like, no, it's okay, I have this other alternative, that's not like a great wedge product, right? And CAC or customer acquisition costs are rising day by day in all segments. So I would be very, very heavily indexed on what's the wedge product. Now, the wedge product gets you a customer, but it also can get you a lot of other things along with it. So going to your question on cross sell, whatever you're cross selling next, let's take your cross selling, post this you're going to do some form of credit. What is it that you're getting that's giving you a right to win in the second market, right? So very often it could be very interesting data. You're collecting data on the customer nobody else has. uh, Very other interesting approach I've seen is on, let's say, if you're doing lending, you have a right to win on collections. So I can take Bharat Pay's example there. I really like that model where, because you're sitting on the UPI, every time the customer pays you, I can collect daily from that. Like I'm sitting on the floor and I'm almost like your escrow, right, in the middle. So I can do collections better than anybody else who would have to come, maybe call you saying, hey, can you like pay SMS? So this is like a very interesting right to win on the credit product. So Bharat Pay, as folks would know, started with payments, then launched credit. So I would underwrite that they have a unique way of winning the market. So I think just focusing on your uniqueness and being, very often in financial services, you hear there is no defensibility, right? Like it's a lot of it is about execution and all of that. I actually think the best financial services businesses have very core defensibility that they've built in, and they've done it very strategically. So, if you take, let's say, like one of my favorite businesses is NSC, right? Like National Stock Exchange is one of the best businesses in terms of network effects, in terms of being, very significant along with BSE, but having very significant market share. So those will always be great businesses. Next, below that will be brokerages. And we have some great brokerages, Grow, Zerodha, all of these that make a lot of money. But, the brokerages can be switched around, but NSC has only like one other competition, right? And then below that will be, let's say, if there were tools that we were selling to brokerages, etc. So I would like think through kind of how core are you, how defensible is it that you're doing, and your size of price will depend on that a little bit. So thinking through that at the early stages in terms of your wedge and your right to win on cross sell is like super important.
Sure, thanks. Thanks for adding that, Mansi, because I think everyone is betting really, really high on cross-selling. And, I sometimes wonder, whether the cross-selling is far more important for the companies than their core business or what. Uh, Coming back to now again investments, where are you investing right now? Are you? I mean, I guess fintech has become a little wide now from wallet to payment to credit, and so many other layers have been also added to it. So any specific domain where you are quite bullish on? Where did you sign your recent check? If you could tell us the name and the size as well, will be uh, helpful.
Yeah. Um, See, tough question. It's like choosing between babies. I'll tell you top of mind themes that I think India is poised very well to capitalize on. So very excited about maybe thematically, I think wealth is one theme that I see a lot of growth in. India is truly coming into wealth today, like going from a 2,500 GDP per capita to hopefully, 4,000 in a couple of years. So, like wealth creation is happening, and the wealth creation is happening with a newer audience. So, I can take an example of like Deserve, which is one of our recent investments in the wealth management space. So, they provide, for a newer age customer, they provide a product plus human experience to manage your money. So you can trust them as an expert to manage your wealth, and they bring together a unique set of products and give you kind of the right updates, engage with you in a very product friendly way, right? So personally, for me at least, I really resonated with the product because somebody tells me to get on a call. Like in earlier days, the relationship manager would come home, have chai, maybe do like a call with you. Like I am absolutely like that. I would run in the other direction, right? Because everybody is generally busy and we trust our product a lot more. Like I trust doing everything on my phone. So this is one example of like a new age company that's targeting wealth that's emerging now in the salaried class, in a lot of new age kind of tech employees and other new business owners. So quite excited about wealth. There are a lot of other opportunities in it. I think bonds is one of the markets that's picking up. So alternate assets and investments, bonds is very interesting. The other recent check that I wrote was in one of somebody building a new product, a new age brokerage for a much younger audience that's coming into the fold now. So it's called Sahi and run by Dale, who was the former chief technology officer at Swiggy. So we've known him for a while. He's very passionate about building a better technology, reliable technology and product. So again, playing on the wealth thesis. The other area that I think is like super critical for India now is just on the infra side. Like we talk so much about banks collaborating with fintechs. And I think it's, the decade ahead is going to see a lot more of that to come. How do you build the right pipes, to
Hmm.
really make that seamless? Because every bank wants to, if a customer today goes to the bank, they want to have the same experience having on Swiggy. And banks are tying up with fintech partners, acknowledging that, together they're stronger, right? So I think that infra theme is another very interesting one. I was shocked to see that most banks are using infra that was built with companies, like with all amazing companies, like multi-billion dollar companies, but built in the 1960s, 70s in the US, and then they've sold their software. That's all sitting in banks in India. So why can't it be like a native India solution? Why can't it be new age? So that's kind of another theme, be it on credit card infra, be it on loan management systems, wealth, insurance, like building that infra pipe is super exciting. Um, and maybe the third kind of piece that I would highlight is we've spoken about insurance a lot. I think that's a very, very massive market, right? And the challenge I will highlight there is that it is still like fairly heavily regulated. So how do you get a license? And licenses are not as easily available. Of course, like ACO was one of the newer age players to get it. So not impossible.
Hmm.
But if somebody can crack that, I think there are large opportunities along health, along in fact, just today met a company that was trying to do embedded insurance and
Okay.
create new products with a reinsurer to provide customized products. Right? Can I provide you a personalized products for like diabetes led health insurance?
Okay.
And price it better. So I think a lot of innovation in insurance. I can keep going. I think these are just three of the top of mind themes. But yeah, many, many more that are
So
exciting.
that's helpful because I think the new fintechs who will be watching this particular show, will certainly come back to you after knowing that these are the themes you are interested in. Uh, One important question, and that's last question from where I started, Mansi, is again, tell us very frankly and honestly, where are we today when it comes to funds? Are funds as easy as they were? Have you kept your tap on, or have you are you going a little stringent about where are you investing now? Because what started was everyone used to get funds, at least few $1 million to begin that business. In fact, I remember that the investors also gave funds even to develop a product, right?
Hmm.
Initially, I think that phase has changed now. So, R1, do you have funds ready and you are absolutely ready to invest? That is one. Second, are your investors, your associates ready to put more funds in your company so that you will have a longer runway and you will keep evaluating more fintechs going ahead? How's the scene on specifically the funding side?
Yeah. Look, I think it's not 2021, right? It's not funding that you look at sometimes and rationally you're not able to justify valuations, amounts. It was easy to knock on the door in 2021 with an idea and some potential and say, or some momentum, right? If you've launched and say, okay, look, this is going to be the next big thing. I know multiple companies that, have taken capital in that phase. And while all capital is generally good capital, it also sometimes puts a lot of pressure, right? Because you have to grow into that valuation. And it all came ahead of time. So it's not 2021 anymore. Sitting in 2024, we're very actively investing. I think it is thoughtful investing that will lead to better outcomes for the whole ecosystem. So let's say if I were, I think the more credible founders, the more, and when I say credible, it's not just on paper. It's how deep have you gone into the customer problem? How deep have you gone into the regulation in your space? So the most thoughtful and credible founders and teams will get a disproportionate amount of capital. So there is capital available. You'll hear about like dry powder, all of that. I think folks are cautious on investing in models that have already not worked, right? Like, I think the appetite for experimenting, the appetite for this regulatory gray boundary, all of those things has reduced. So it is, from that point of view, it may feel more stringent, but the smaller pool of very credible folks will continue to attract. And I guarantee almost that, like, this vintage of companies is going to create the next like very large real set of companies versus folks that for no fault of theirs, like, I don't blame founders, someone's giving me capital, I will take it, right? Versus companies that are still figuring out their direction because of more lenient investments, right, made in 21. So I would not fear. If I were like a founder today and I'm building a good healthy business, I would not fear. Know that the valuation will be rational. People will look at multiples. They will say, okay, if your revenue is 2 million, why do you want to raise at 80 million, right? Like, that question will come up, which sometimes, in hearsay, those questions were not, those were loser maybe a few years ago. But if you're building a good business, you will definitely get funded.
Sure. The time is up already, but let me shoot one more last question. I'm really excited to actually ask you this. I didn't ask this question to, any investor in last couple of months. Uh, डर लगता है. What is the feeling when you actually sign the check? ये पैसा गया, अगर नहीं आया तो I'm sure you will have a hope कि चलो ये Apple बनेगा, पर Apple नहीं बनेगा और Kodak बन गया तो डर लगता है. What is your feeling when you actually sign a check?
I'll uh, I'll answer, maybe I'll extend your question a bit. Feeling when you sign the check and feeling 2 months after. So when you're signing the check, tabhi to you're exhilarated. Very often, you spend a lot of time with the founder, like in the thick of things. It's like joining, like जब वो शादी में मंडप पे round ले रहे हो, right? You are like सब फूल फेंक रहे हैं, like you're very very excited. Um, I think 2 months later, you come to know the trajectory of the founder and company. So tabhi, that's when you have maybe one more reaction where you're like, hush, this is like really good, or like, oops, like this thing I didn't know. That's the honest thing of it. But these are long journeys, right? So I think a lot of that flows into the next investment you make. Again, like I said, you make new mistakes always in that sense. And I would actually say founders के लिए भी शायद पैरेलल फीलिंग होगी जब साइन करते तो दिल अरे वाह पैसा आ गया, like XYZ has come in. Then after 2, 3, 4 months you actually get to know who you're in partnership with.
Right.
So both parties spend more time earlier, and I encourage, हम तो ref check करते हैं, founders should also do ref checks on us, right? Talk to founders of us that have done well, that have failed, so that our feelings are consistent 2, 3 months
Okay.
before, after. Yeah.
Sure. Thanks for sharing all those points, Mansi, and being very, expressive about your views. Thanks for your perspective, and thank you so much for your time for FinTech Diary. Thank you.
Thank you for having Mol. Great chatting. Yeah. See you.
Thank you, and thank you so much for watching etbfsi.com. Thank you. Stay tuned. Stay connected.